would you look at listing probably a financial services arm? Because one gets the feeling that that's developed a phenomenal amount of, you spoke about its size and scale as well, and it's almost become a financial conglomerate, a non-banking financial conglomerate, if I may use that word. So is that under consideration? Would you look to unlock value? Because you've done that with your, with the carbon black sale, ITITES business, fashion demerger. So you've done a lot of, value unlocking steps in that direction. So would you look at something in the financial services space?
Most definitely. I think we built a very neat asset with some very high quality businesses. Like you said, it's a conglomerate of businesses in the financial services space. I think it's very reasonable to assume some sort of a monetization event. May not be an IPO. We still don't have clarity on that. But the fact is that we would like to unlock some value for the equity holders of ABFSG, which is the financial services arm of the group. Just because it's an interesting point in time, we've reached critical mass, and we could use the equity to fuel the next phase of growth.
But why would you say that IPO is not necessarily the route that you'd look at?
So again, it goes back to what monetization event gives us the maximum value. When I say us, I mean not just the promoters, but as importantly the other shareholders of ABNL. The fact is that we are not really pushed to the wall. We don't have a financial crunch because of which we need to do something in the next
3 months
2 months. And therefore we have the leeway of time.
But would you look at strategic investors or financial investors in such a case?
So we actually see ourselves as being a strategic investor.
Sure.
Having been in the business for more than 2 decades now. And if at all we bring in another investor from the outside, it would have to be a financial investor. So that's one of the options that one would look at.
But do you have a time frame at all? Could it happen this financial year, or is it likely to happen post that?
So like I was saying, Sandeep, no urgency for cash. We have a source of funding in the form of ABNL, of which the financial services business is a part. And I think we'll wait for the opportune time.
Let's talk about the commodity business as well, Mr. Birla. Global commodity cycle has seen a huge correction, but what's your sense on the upswing now that we are seeing over the last 3-4 months? Is this here to stay?
So the sense is that it makes you feel very happy because bottom lines should be looking better, at least for the next few quarters, if not more. Having said that, in the last few years, you've seen what we call the financialization of commodities. So a huge amount of speculative money that goes in and out of commodities, which makes forecasting commodity prices almost an impossibility. So we really have to wait and see how it plays out. So many macro factors globally that come into play. Difficult to say whether this upswing is here to stay, and if at all, for how long.
Your main commodity business, Hindalco, of course, is now, one will have to say, flavor of the market, so to say. The stock price hit a 52-week high recently as well. And the sense that one gets is that the major capex for your metal business is behind as well. And will improved cash flows now lead to some amount of balance sheet deleveraging? Because that was one of the concerns several quarters back. Do you see that happening, improved cash flows now coming through?
Very much so. So we've seen very large capex in the last few years. That was something that was planned. So when we thought about the capex 7-8 years ago, we planned to have this large capex that would take Hindalco to the next league in the global ranking table in terms of being a metals conglomerate. And the plan even then was to delever the balance sheet after the completion of this capex program, which is the phase that we are in just now.
Novelis, your prized acquisition, probably one of the success stories, so to say, is on very strong footing as well, with volume visibility being seen as well. And we saw stellar performance in the last quarter as well. So this $1 billion EBITDA expectation now is again revived. But tell us, given the way the global economy is, given the way US economy is, and of course concerns in Europe post-Brexit, what are your ambitions for Novelis, Mr. Birla?
Novelis is again at a very interesting phase of the evolution of the aluminium business. So aluminium is seen as the material for the future, especially, let's say, for the auto industry, which is looking to lightweight. and meet the new emission norms that have been set for it. So huge churn in terms of the product portfolio, much more technologically challenging, but which is something that Novelis has a huge strength in technology. And I think the fact that it has consolidated its global position almost in every market across the world gives it huge sustaining power and huge strength as the largest aluminum rolling company globally.
That $1 billion EBITDA target, are you on track to achieving that in FY17?
So that's something that we put out in the public domain. Q1 has looked very good. If you multiply that by 4, then we should do better than 1 billion. But I think we are very safe to say that an EBITDA of $1 billion is something that Novelis is set to achieve.
Great. I should focus and talk about the e-commerce and the e-tail business. You made a big splash there with Aboff recently as well. But I want to understand the strategic intent now. Are you looking at all this just as a distribution channel for some of your retail products, or is there a strategic intent to be invested in the e-commerce business? What's your thinking on e-commerce?
So it's been a very interesting experience. It's a world like no other in terms of any of the other businesses that we've run. Having said that, it's a business that requires a very long run. Returns are uncertain and a long time to come. We see this as an interesting distribution channel, not something that we would throw billions of dollars, forget billions of dollars, even millions of dollars after necessarily. So we want to be in the space and grow cautiously, and we'll have to see how it evolves.
What about defense? Because that's a sector that seems to have caught the fancy of a lot of large industrial groups as well, and there is a lot of policy action that we're seeing in the defense. It's seen as a clear thrust area of this government as well. Would you consider the defense sector as for a potential diversification?
So studying it, not sure if we would actually make a foray. We're trying to get a holistic view of the sector, what it takes to succeed in the sector, the kind of partnership that we would need to have, and what we and a potential partner would bring to the table. And is there a sustainable reason for us to be in a partnership and to actually be in a business which, frankly, we know very little of at this point in time. So something that we're still looking at.
So what looks exciting to you? I mean, the fact that you're studying it is in itself interesting, and the fact that you're saying you're looking at doing it in partnership because obviously they'll bring the domain expertise. What looks exciting in the defense space?
So the fact that it's a growing sector, the fact that India is seeking to be self-reliant in the defense space, also that the government is putting a huge thrust in terms of private participation in the sector. Having said that, we've been known to be cautious and take calibrated but very long-term views of the industries that we are in. So studying the sector, jury is still out. We're still to put our arms around it and figure it out completely.
How far away are you from being in a position where you can take a decision on whether or not you want to invest in this sector?
Safe to say in the next few months we take a call, which means we would decide on whether or not we want to be in the sector, which means that we would want to take a call on which part of the sector and the kind of partnership that we would want to pursue.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.